Hello, my name is AnkitSharma and I'm from 1921 batch. As part of IEP curriculum, we're going to talk about three topics today. The first one being bank mergers, COVID-19, and infrastructure issues in India. Let's talk about bank mergers first. A merger is simply the combining of two business entities to form a larger one, but with no explicit change in ownership. The largest ever merger in the public sector banking space in India has taken place on Wednesday, April 1st, 2020, when six public sector banks were merged into four large banks in a bid to make them globally competitive. Customers, including depositors of the merging banks, will now be treated as customers of the banks in which they have merged. There are various reasons cited by the government for its decision to merge state owned banks. One of them is that large banks will be able to lend more money and help revive the slowing economy. The government also believes that increased credit growth is essential in order to achieve its target of growing India into a $5 trillion economy in the next few years. The merger of banks per se will not lead to a decrease in the absolute size of bad loans in their books. Undeniably, there are too many public sector banks in India and mergers are a good idea in theory. However, mergers should be done between strong banks. It is important that the entity created doesn't end up being weaker than the original bank. Now let's talk about COVID-19. The constantly evolving COVID-19 pandemic has cast a long shadow on the global economy, which was already jolted by the US-China trade war. With fears of a global recession on the horizon, COVID-19 appears to have dealt the global economy a triple whammy. A massive supply chain related disruptions across a range of industries from containment efforts in China and other economies, amplification of demand side shocks due to uncertainties as well as lockdown and other containment measures domestically, and propagation of financial shocks and the US dollar credit crunch. The immediate economic and market impacts of the coronavirus have been on India's financial market as well as the rupee, which hit a new low versus the US dollar in March due to global risk off sentiment. Although an appropriate fiscal response is imperative to uplift the economy and especially assist the most vulnerable, a massive fiscal expansion of the type envisaged by many other countries is likely to exceed the fiscal targets set by the FRBM. Even if the RBI rolls out more aggressive measures, the broader concern that still remains in the inadequate monetary policy transmission that limits the effectiveness of any monetary stimulus in India, especially in the context of an impaired financial sector. Like India, several international economies are becoming cognizant of the risk they face by being overly dependent on the market. Making the current situation a learning opportunities, CXOs of Indian multinationals who recently attended the annual meeting of the Confederation of Indian Industry believe this is the time India can work on capturing potentially 40% of their competitors' market share by looking at indigenous production of goods, furthering the country's Make in India campaign. Now let's talk about the infrastructure issues in India. The recent news that India plans to open 100 new airports by 2024 is both ambitious and commendable. That said, large scale infrastructure push, whether in airports or any other sector, will have to overcome challenges that are being faced across the infrastructure horizon in India. More importantly, common pitfalls such as retroactive contract charges must be avoided in the process of infrastructure creation. It needs to be underscored that the challenges that Indian infrastructure must overcome are neither new nor exclusive to India, but a re examination of the problem is critical. It is essential for India to ensure that the infrastructure and infrastructure related businesses have ease of access to inputs at the appropriate price level so that businesses created can deliver the infrastructure service sustainably and at prices that reflect the real value of the asset. This point applies across the spectrum from land acquisition price for highways to spectrum auction prices in telecom. Thank you.